With us on Halftime Report, and it is now time to get you a CNBC TV18 exclusive. We're learning from sources that HCC is close to securitizing receivables related to arbitration claims. Nimesh has more details here. What is this latest development and how much money are we talking about, Nimesh?
Hi, Sarvi. So just to put it in simple words, what I've understood is that HCC is looking to monetize the arbitration book or the arbitration exposure. A lot of the money for HCC for many years is stuck in arbitration, and they've not been able to receive that money for various reasons.
And this is arbitration with the government.
With the government, with other agencies. Now, what we understand is a leading private equity player is likely to buy out this entire exposure of HCC in the arbitration cases at a price of 1,800 crores. Okay. So just to put this into that amount into perspective, Surabhi, the current market cap of Hindustan Construction is 2,100 crores. If you look at the standalone debt of Hindustan Construction, that is around 3,500 crores. So EV comes out to close to 5,200 crores. On a 1,500 crore EV, we're talking about company getting 1,800 crores from one of the large PE funds with regards to the arbitration total exposure that they have towards this company. Officially, we did ask the management about a confirmation, and what they've said is very clearly that while they do not comment on market speculation, they intend to extract value through the monetization of non-core assets and by monetizing receivables under the existing claims and awards.
So let me ask you this: what was the total receivable amount? The total amount under arbitration is 1,800. So they're getting net or
no. So the total exposure of Hindustan Construction in the arbitration cases is close to 3,800 crores.
3,800.
What this means is they are selling down this at a 50% haircut.
Yeah.
And that's why PE will buy, right? A PE will buy if he's getting at a 50% haircut, and he expects that this money will come over a period of time. For Hindustan Construction, it's important because immediately they get infusion of money, which will be able to repay the debt. As I said earlier, if you look at post Q3 numbers, the gross debt is close to 3,500 crores. And if you look at the overall numbers, the gross debt is reduced by 235 crores in the first 9 months till date. And in the last quarter, they've reduced the debt by 125, 126 odd crores. So they have been reducing debt consistently for the last few quarters, and that's been the trend in Q3 as well. But if this money comes, then I think it's a big trigger, simply because with 1,800 crores, they'll be able to reduce half of the debt what they have on the books as it stands on December 31st, 2018.
Thank you, Nimesh, for putting that in perspective. So 1,800 crore rupees likely to come in, though at a 50% haircut. Let's move on. The other stock you should have on your radar is Sterlite Technology. It's down close to about 8.5% in trade. Earlier today, we had Haitong Securities, which came out with a note where they spoke about China Mobile, which is a large telecom operator in China. They held an auction for optic fiber. This happened earlier this week, and their tender for standard optical fiber cables saw a 50% pricing decline. And that Haitong Securities says was 40% lower than their own estimate. So that's the reason why Haitong has downgraded Sterlite Technology to a neutral from a buy rating. They've lowered the target price to 235, which is where the stock is now currently quoting at. What they see is a high risk of substantial pricing pressure in the global optic fiber space over the next 1 year on account of excess supply in the Chinese markets, which is why they have lowered their the pricing for optic fiber as well as optic fiber cable for the coming 2 years. And that is pull down the EPS estimates for Sterlite Technology quite significantly. So for FY20, they've lowered the EPS estimates by 30%. So the net story is that everyone thought that on account of 5G, we will see strong demand. So people globally were betting on telecom operators as well as vendors like the optic fiber cables, like Sterlite Technology. So that was the big reason for players to get bullish on companies like Sterlite Technology. But now what we understand is on account of excess supply, the prices of optic fiber have come down in the recent auction, which also spells bad news for, a Sterlite Technology. Although Sterlite only gets 6-7% of its revenues from China, but there could be a global revision or a reset in the prices.
Well, we did catch up with the company, by the way. Now, their claim is that this is a temporary demand-supply mismatch. Hear out the management.
So, I agree the China Mobile tender, which has recently come, is in a lot of focus right now, but structurally, everything is right in play the way it had to be. There is a temporary supply-demand mismatch because of the delay in China Mobile tender, but especially only in China. So China for us is about 6-7% of the business, which is going through a structural shift, but it's not there for long. So for us, our margins are now the business is optical fiber business, plus a large proportion is also coming from our services and software business. And the margin profile for that, I mean, if we see our order book of about 10,000 crore, almost 5,000 crore is now coming with services and solutions business. We've been growing at about 35 to 40% revenue growth year on year for the last 3 to 4 years, and we believe that will continue for the current year as well as next year.
All right, so that's the view from Sterlite Tech. Markets holding steady. It's a good Friday so far. Let's go across and take a look at some of the brokerage views that we've got today. Manglam's here with the details. Manglam?
Well, I have a couple of them. We start with CLSA on IndusInd Bank. Now, they're positive on IndusInd Bank. Remember, over the last few trading sessions, we've seen a big rally. This week itself, it's been around 12% move coming in on IndusInd Bank. They have restated their earnings to reflect the merged entity being Bharat Financial Inclusion as well as IndusInd Bank. And as a result of that, they maintain their buy rating on the stock because the synergies with the merger as well as normalized credit costs on account of increased provisioning to the IL&FS exposure. Along with that, some operational synergies will lift the company's earnings and return on equity. They expect the return ratios to rebound from FY20. IndusInd Bank, remember, will make 60% provision to its IL&FS exposure in FY19 itself. So that would normalize their credit costs to about 90 basis points. And with that, we'll have the Bharat Financial merger, which will come in and lead to non-presumptive benefit from 150 to 200 basis points lower credit costs. At the same time, capital efficiency. The operational efficiencies will come in from not just operating performances, but also the retail deposits coming in and fee pool. So as a result of that, they expect 20 to 21% ROE with some more upside going forward. So as a result of that, they've upped their target price from 1910 to about 2120 on IndusInd Bank. The other stock that I'm watching out for is Bharti Airtel. Quite different from IndusInd Bank in the movement that we've seen from the start of this week and the movement that we're seeing today. So some bit of profit taking on Bharti Airtel because Jefferies has downgraded that stock. They believe that the recovery is still some time away. The fact that the promoters are pumping in money tells you that maybe there is no real visibility on pricing growth come by. On Africa, what they're saying is, well, the company's value unlocking may not be as much as they expect. And while this rights issue does take care of the debt of the company in the near term and improves their balance sheet position, the important part will be that pricing growth is not come by, and pricing is more important because about 10 rupees worth ARPU leads to close to 10% growth in the company's EBITDA and 40 rupees to their target price.
Thank you very much for that. We'll slip into a very short break on that note. Before that, a quick recap then of the top buzzing stocks that we're looking at. We've got HCC, Sterlite, IndusInd Bank, and finally, Bharti Airtel. Well, on that note...